Today was a brutal day in the stock market as investors' fears of a looming recession grow. So let's start with the small stuff. Today, manufacturing data came in below analyst forecasts across the board. Employment and new orders plummeted with the largest month-over-month loss since March of 2020, while manufacturing prices skyrocketed. Thankfully, we don't have to look very hard or very far for the reason. The 25% tariffs on Canadian and Mexican goods are set to begin tomorrow, March 4th. However, in contrast to last month where negotiations between the U.S. and our largest trade partners managed to delay tariffs until March, Trump has stated there is no room left for negotiations. The impact of these economic updates and looming tariffs is obvious. The S&P 500 fell almost 2%, led by heavy losses in tariff-sensitive sectors such as technology, energy, industrials, and materials. However, the bad news doesn't stop there. Every day, we are getting more economic news that is pointing to a recession. Last week, the 3-month versus 10-year bond yield curve inverted for the first time since 2022. The bond yield curve has historically been one of the best leading indicators of a recession, accurately predicting every recession since the 1970s with only one false positive. But it's not just the bond yield curve that is sounding the alarm of a potential recession. The Atlanta Federal Reserve provides regular updates on their forecasts for the current quarter gross domestic production, or GDP. This metric looks at how much stuff the U.S. economy produces, with 2 consecutive quarters of negative GDP being the textbook definition of a recession. While forecasts for Q1 GDP were positive at around 2% expected growth, this forecast was heavily revised this week, with current predictions expecting a 2.8% loss in GDP. This is only the beginning, with plenty more crucial economic updates coming up this week, such as economic optimism, factory orders, and the all-important unemployment rate. Follow for our ongoing coverage of these economic and investment updates.